the right time. So certainly.
And what is the exact cash on ENIL's books?
Again, because I can't give you the figures at the end of the quarter, we haven't announced them yet. But if I remember right, it was about 550 crores at the end of the last quarter.
All right, Prashant, thanks a lot for that quick take and joining us. So that's ENIL, one of the stocks of the day again, stock up about 12%. But let's get back to market. We have yet another expert joining us, Ritu Arora, Chief Investment Officer at Canara HSBC OBC Life Insurance is with us. Ritu, hi, good afternoon. So,
good afternoon.
How does it look like? You know, we've seen yesterday it was a big down day. Today we have a big up day. Do you get a sense that the market is heading back to all-time highs? And more importantly, can retail investors still participate in this market?
Markets are not so far away now from all-time high, and that's a high that the market has made multiple times over the last 1 year. December is when 9100 was where the market touched. We've seen 7900 couple of times since, and then market bounces back as well. So I believe that the market is in this range and likely to remain in this range for a while till we see corporate earnings improving. The economics are all in place, but you need that earnings supporting the next level of growth from here. So yes, there will be entry opportunities, I think at least one more for the investors. Long term, very bullish, but for the next couple of months, I think this is the range.
Okay, you spoke about the earnings opportunities that you will get. Infosys was one such opportunity, very good set of numbers. What are your thoughts on not just the stock, but on the space itself?
IT sector, I think, is a sector I've always liked, but of late we've seen that volumes have been a challenge. The pipeline is stressed, the margins have been under pressure, and the transition that they're needing to make towards the new business requirements, be it cloud, etc., is not significant enough in our IT company balance sheets yet. So at this point in time, given the situation, I'm actually cutting weights, and I'm no longer overweight on IT sector.
All right, we'll just take one look at the markets. In fact, it is spiking up quite a bit. So 340 points higher now on the Sensex. And in the broader markets, there are a lot of larger mid-cap names that are picking up pace. Look at LIC Housing Finance. After a good set of numbers, that stock has bounced back yet again. IRB Infra, India Bulls Housing Finance, Century Textiles are just a couple of stocks that are actually rallying. There's a very long list of stocks that are booming in trade as we speak. But apart from IT, are there any other spaces that you would advise investors to get into?
Given the way the markets are valued at about 18.5 times forward FY16, I would think it's a market which is right for bottom-up stock selection rather than a sectoral call or just a macro call on the entire index. And they're promising stocks across sectors. As sectors, I still like private sector banks, not so much IT as I explained. I still like automobiles, not two-wheelers, but four-wheelers and auto ancillaries. Pharma and FMCG still are sectors I like because of the earning visibility and the sturdiness and the predictability of the numbers there.
Okay. Ritu, Sun Pharma is your top holding among a lot of your funds. Are you perturbed by what happened yesterday with the profit warning, and are you thinking about trimming exposure, or is this actually a good buying opportunity with the kind of fall that we've seen?
I'm restricted from commenting on a result which was yesterday, but if I were to speak about pharma sector or in general what we see, I'm not very perturbed. In fact, I think every dip in pharma and FMCG is a buying opportunity, and I think I'll continue to add my weight in that sector.
Okay. Along with Sun Pharma, you also have something like Tata Motors, which is your top holding. You know, that is another stock that has seen a significant amount of derating in the last many months. You think this is the best time to buy some of these good quality companies that are going through an adverse time?
Absolutely, and I think every dip is a very good opportunity. Over the next 3 years, I think markets will demonstrate more than double-digit CAGR return, and hence every dip in these stocks is a very good opportunity. And clearly, brands which have strong vintages, have cash flows, sturdy balance sheets, and good margins are sectors and stocks that I would build a position in every dip.
Okay. One final question then before we let you go. You were telling us about Tata Motors. The other stock that you have on your list is Axis Bank and HDFC Bank. This time we have seen some amount of chinks in the private sector banks, the smaller ones at least. That would not worry you, and you would continue to accumulate?
Banking reflects what the economy has to say, and I think the stress that we've been seeing in banking system is now visible in private sector banks as well. banks have been dealing with it. But there's still a fair bit of divergence that one can see in private sector banks and public sector banks. Clearly a preferred sector for me is private sector banks, though they are almost 2.7 times book compared with PSUs at about 0.9 times book value. Yes, there is stress, but there's far more stress in PSUs, and I don't see that abating in near future, at least for next couple of quarters. So yes, private sector does remain a large holding in my portfolio.
All right, Ritu, thanks a lot for dropping by and talking to us. So that's the view from fund manager. We'll take a break on that note, but our closing bell money control question of the day is on Eicher Motors. That's reported record sales of Royal Enfield in Q2. Will the performance continue in Q3? That was our question. Log on to moneycontrol.com and post your responses there. We'll read out the most interesting ones post 3:30.
All right, on the other side, Indian equities may be on a tear today, but global markets are having a poor day of trade. We'll touch base